All right, so it is the season of collaborations and joint ventures as well as acquisitions. And this time around, we are looking at a joint venture in the metal space. We have Daniel Tan, who's the managing director at Asia Pacific at Hunting Energy Services, and Neeraj Kumar, the group CEO and whole-time director at Jindal SAW, joining us now for a joint venture that they've entered into. Thanks a lot, gentlemen, for joining in. First, coming to you, Mr. Kumar, if you could tell us, what's the kind of investment that's outlaid for this plan, and how much of that will be coming in from Jindal SAW? How much of that comes in from the other company?
Hi, good afternoon to you and good afternoon to all the viewers. This is a significant joint venture. We started the journey a few years back where we were working under a licensing arrangement. Now we have set up a 51-49 joint venture in Jindal SAW's 51. The initial outlay would be $20-25 million in capital, equivalent amount in the working capital, and we have kept enough provisions to grow. As we seed the market, we will grow and we will expand. This is a major initiative under the Atmanirbhar Bharat initiative. So this will completely align to that.
So when you say you will grow and you will expand, can you just help us with some numbers? What kind of growth are you looking at over the next, say, 12 to 18 months? And in which areas are you looking to expand into?
This is essentially going to focus on the OCTG sector. Daniel will tell you a little bit more about their global expertise in the premium connections. This has a market potential of approximately $200 to $300 million. And we will have to seed the market and then see how we grow it up.
Okay. All right. Daniel, if you could then just come in on it, what is the total investment envisaged? When do you expect commercial operations to begin from the joint venture and the revenue potential?
I think Mr. Kumar just mentioned about the investment. So we're looking at a region of 20 to 25 for the start. On the market, basically for the start, we're going to look at domestic because of the huge potential in domestic. Obviously, I think as we progress, right, we cannot lose our sights on international market. And having a made in India, right, will give us a lot of supply options in terms of this, how the OCTG solutions go in the region.
All right, Daniel, we'll go back to Mr. Kumar. Mr. Kumar, you said about $25 million is the investment in terms of capital, and you have another 25-26 coming in terms of working capital. This is a 51-49 JV, so I assume that 51% of the investments would be made by you. So of this total $50 million investment, assume $26 million would be made by you in both working capital as well as the assets. Is that correct?
With a slight correction, because of the strong partnership that we have, as well as the market that we establish and that Hunting has, we would also be able to get some bank financing. So it will be a mix of equity and debt, total outlay of approximately $50 million contributed by the partners in the proportion of their shareholdership.
What we're trying to get at is that what will be the outflow, initial investment from Jindal SAW's books, and where will you fund it from? Because you already have a debt of over 4,100 crores.
If you look at, we have a net worth of more than 6,000 crores. So initially, we will be funding it from our internal accruals. The equity outlay would be approximately 6 million each from both sides.
So you said initially you will be funding it from your internal accruals, but is it fair to assume that your debt could go up in the near future? As Mangalam was saying, you have over 4,000 crores of debt. What can we expect over the next 12 to 18 months in terms of the absolute debt figure?
Again, the 4,000 crore debt that you are mentioning to is split into term loan, which is approximately 17 to 1,800 crores. The rest is working capital. As you know, the working capital based on the trade volumes that we conduct, because all our businesses are actually, it runs parallel on the trade finance. So the debt equity of the company at this point of time is very healthy, below less than 1. And we would have no issues in funding this from our internal accruals.
Okay, all right. So that answers the question with regards to the consolidated debt on books for Jindal Saw. But Daniel, just wanted your thoughts in terms of where exactly you probably see this joint venture heading, or a partnership with Jindal Saw heading, maybe in the next 2 to 3 fiscals. Have you thought about an expansion in terms of partnership beyond this joint venture? What would it contain? And what are your plans for India beyond this joint venture?
That is a very good question. I think if you look at what we are putting up setting up in Nashik, this joint venture facility, it would be the first, not just in India, first in the region that offer the most extensive range, the widest range of OCTG, and accessory solution. Not just in India, but for the region. And we are very confident and very optimistic about the future, because the business will grow without a doubt because of the prospect that we're looking at. And as we progress, in tandem with our business growth, right, there would be more, investment pouring in and bringing in new product lines to expand on the product portfolio that we already got. So we are very excited about this new JV, this journey together.
Right, and you said the addressable market, Mr. Kumar, would be close to around $200 to $300 million. What's the kind of revenue that you're targeting from that market, and by when does that flow into your books?
We should be in commercial production second half of this year for sure. And then we would grow the market as it depends. As you know, these OCTG markets, largely people like ONGC, etc., are the major participants, and it is a tender-based business. So in terms of the revenue projection, it would largely depend on the demand that oil majors have in India and around this part of the globe.
Okay. All right. Mr. Neeraj, before we wrap up the conversation, just a quick check in terms of the business fundamentals X of the joint venture. Your order book, which as of the last figure we had stood at around $750 million. Where exactly does it currently stand, and what is the demand environment looking like?
The demand is looking good. Essentially, the pandemic has disrupted the market a little bit, but now we are inching towards a billion mark, which is the comfort zone that we have for our total order book. And with joint venture coming in, see, this joint venture, we are setting up the plant at our Nashik facility, which is essentially a forward integration. All the raw materials for this joint venture would come in from the Nashik facility, where this joint venture facility would be co-located, and this would also add to the order book and the top line.
All right, and finally, what's your current order book right now? The last known number was close to around $750 million. Where does that stand at, and what's your revenue projection for FY22?
FY22, I may not be able to give you the exact number because the quarter has closed and we have not had our board meeting as yet. So, but we are tracking whatever we had projected for the year end. We would be able to meet that.
And your order book, $750 million, where does it stand at right now?
That is upward of 800.
Upward of 800. Thanks a lot, Mr. Kumar and Daniel, for joining in, giving us all those details. Wish you good luck for this joint venture. The street likes the initial signs of that, because we've seen a stock rally of 5% in today's trading session on Jindal Saw. In the last few trading sessions, it's rallied about 25% as well. With that, we'll take a short break and put the spotlight on all the other stocks that we're tracking this afternoon.